Thank you so much for joining us, Ravi. Building for women dairy farmers is something that we are very, very excited about as IMA Ventures, and we know some fantastic work that you and your team have been doing and trying to get at some really hard problems that um, women working in this value chain face. I will not take any more airtime. I know we have limited time with you. I know that you want to talk about some experiments that you've tried with digital repayments. I open the floor to you, and maybe we could hear directly from you for about 20-25 minutes or so. Folks, if you have questions in the interim, please drop that in the chat box. Otherwise, we will try and carve out about 10 minutes towards the end for a direct conversation. Ravi, over to you.
Thank you, Supriya. First of all, my sincere thanks to IMA Ventures for giving me this opportunity to present to the forum on the experiments. I can say, it's a business experiment. However, it's a very bold step. So a lot of learnings, and the learnings actually strengthens us and gives us new directions in the business. And thank you so much for this opportunity. So just a brief introduction about Dvara e-Dairy. Dvara e-Dairy is a dairy fintech providing seamless access to financial services to 100 million dairy farmers at scale by leveraging data and proprietary technologies. What we solve efficiently is for the lending institutions, insurance companies, and dairy farmers, the critical or the key, the key factor in the dairy segment is the cattle. So we digitize the cattle. So digitize cattle for digital India. That's our scope, and that's what we are working on, and we have developed solutions. We leverage images to a greater extent. So leveraging vision computing and advanced veterinary science and practices, we are in a position to solve a host of problems to the stakeholders in the dairy economy, be it lending institutions, insurance companies, and the dairy farmers. So typically, we provide authentic, reliable tools to the lending institutions and insurance companies to underwrite cattle loans and cattle insurance, and for the dairy farmers to know about their cattle health, feed and fodder management, and to incorporate preventive and primary care in the dairy, which helps them to optimize their cost. With this brief introduction, I would like to give you a journey as a context, so that which gives you a lot more understanding on why we are here, where did we start, and why we are here, and what are the learnings, which would actually help you to connect. When we decided to start our lending, the operations, we are primarily a business correspondent. We are a private limited company. We are not an NBFC. So currently, we are working with Jana Small Finance Bank, and we are working with Godrej Finance Limited. So we are a business correspondent for these two entities. So our role as a business correspondent, we are an end-to-end service provider, right from customer acquisition to collections. So when we decided to get into this business, we decided to be completely digital. So no branches, right? And no cash transactions in the field. Though we had some knowledge on what would be the reality, but we took the bold step of let us get into this learning of going through this process of complete digital journey. So doing the loan processing, initially there were some part of the digital loan processing was manual, but the collections were completely moved to digital. So we started with all the collections through digital mode. As an operation, if you look at it, we have We have our operational presence in Tamil Nadu and Karnataka in selected areas, not across. We have done close to 75 crore plus disbursements in the last 2 years, right? Uh, with this brief, the introduction about the organization and where we when we started and where we are here, I would like to provide a greater understanding on the complete journey, starting from understanding the rural, understanding the customer, understanding the behavior, what the competition does. When we say digital repayments, what does it mean? What are all the challenges that are existing? How are we addressing some of those challenges? Those are some of the things which I would like to present to you. Also on what is the the way forward as a last slide. And just to set the context clear, here are some of the disclaimers which I would like to add. As I mentioned, we are a dairy fintech. So my observation has been completely on the dairy. This may not even apply to some of the sectors where this particular rural lending institutions work. So I would like to have that limitations very clear. One is we have been working with dairy farmers and in specific women dairy farmers. That's what we have been working with. And number two, some of the data what I can present, I can tell you, but some of the sensitive data, I request you to maybe we can connect one-on-one, not to share anything on the forum. Number two. And number three is this is the experiences are completely based on what we have gone through in these 2.5 years, plus close working with some of our partners and industry players and their interactions. So that's what I just would like to set as the limitations or the expectations of this on during this presentation. So I would like to get into the presentation here. Just a minute. Yeah. Hope my screen is visible to you.
Yes, it is.
Yes. Okay. So the topic is digital repayments, expectations, and reality. So it's a very interesting topic. Why? Because in any lending process, as a loan process, if you look at it, the journey is complete only when the loan repayments are done. And in fact, the loan is given to the farmer. The lot more expectations from the farmer on or the borrower to make the repayments, on time. And the entire loan process is not complete if we don't without collecting the repayments, 100% repayments. Approximately, if you look at this industry, the OPEX for repayment is approximately 2%. On one hand, there is a pressure on the lending rates because there is a there is a uh, uh, the the cost benefit ratio. Number two is competition, and number three is cost of funds and the expenses. So the OPEX is approximately 2% only for the collections. There are we have other OPEX costs like customer acquisition cost and the processing cost. Currently, if you look at it, predominantly it is cash across. There are a few organizations where they have got both the models, cash versus the digital. There are organizations, they are completely cash. So, but predominantly it is the cash model. As I mentioned to you, there is always a pressure on productivity. We need to increase the productivity of the employees so that the number of customers per account increases, which also gives us scalability at the same time optimizing the cost. Also the fraud detection, because in lending, this is something which is a continuous practice which happens across all the organization. This is one of the key elements which we need to be aware of and keep systems in place to detect, not only detect, but also to mitigate and to eliminate. So these are some of the basic things. Um, the transformation at the rural place, because when we started the lending operations, when we decided that, okay, let us have digital repayments, some of the key things that went into our mind, okay, post-COVID, there is a lot of, the digital penetration has increased, digital repayments, the digital transactions have increased significantly. Smartphone penetration has increased because during the COVID time, most of the classrooms where, including the government schools, all those the rural households, they were forced to purchase uh, smartphones because all the classes were happening digital mode. So the smartphone penetration increased tremendously during the COVID time, and post the COVID time, that habit continued. There is an increased social media usage by at the rural in the rural, be it Facebook, be it various other social media platforms where it is being continuously, there's an increasing trend. Also, the digital economy uh, in the rural, if you look at it, we are able to provide, we are able to see QR code in a pawn shop or in a small petty shop or in a kirana shop, and they are accepting the digital payments. So, which is also which gave us a larger confidence, or it gave us a confidence that why don't we get into when there is a digital transaction happening, why not the digital repayments? That is the question that we asked ourselves, and we took the bold step of getting into that the digital repayments. What is the expectation? Every lending institution has got an expectation on the repayments. The first expectation is on-time repayment of 99% plus, because when the loan is given, the repayment date is fixed. On the date of repayment, the expectation is that at least 99% of the collection happens on that particular date. That is the expectation. The next is expectation is all the repayments happens through digital mode. So the field staff, they have got enough time to do more business, means customer acquisition, and also to reduce the cost of collections, which contributes directly to achieving scale. That's the expectation. Also, the expectation is digital is easy to adapt. Means every kirana shop has people are doing this. Why not digital repayments? So it is easier to adapt because it's so made very simple across by various institutions or the fintech platforms. They have their digital payments platform. I'm sorry, the digital payments platforms where it is very easy. Just there is no need to type anything. Scan it, pay it, complete it. Right. So it is very easy to adapt. So it is not going to change the behavior of the people or to learn new skills to make these digital repayments. That was also one of the the key area that we thought that okay, it is easy to adapt, then it would go through well. Also, the smartphone penetration in the rural areas, which I mentioned that it has been consistently increasing across. The way I would like to put it across is, uh, yeah, urban household versus a rural household. In an urban household, there are 2, 3 smartphones in every household. But in rural household, there are 4 people or 3 people in a family. At least one has got a smartphone. Maybe the person who has got a smartphone may not be in the same living in the same household. He might be working in Chennai, or he might be working in Bangalore, or she might be working in some other place. But she has got a smartphone, or he has son or daughter has got a smartphone, which there is an availability of smartphone in majority of the majority of the households. However, there is also a segment of households who they don't have smartphone. They are not using smartphone. They are comfortable in using the analog phones due to various reasons. I was very curious, and I spoke to few customers to understand why are you not, as a dairy farmer, you can afford a smartphone for 5,000 rupees or 7,000 rupees, which is you can afford to purchase, but why you are not using it? The simple answer that came was, when I use a smartphone when I'm doing my work in the rural in the field, if it accidentally it falls in water, then I lose that entire money. Whereas this analog phone is not, it is I can use it in any conditions. That's number one. And number two is cost is a factor, but it is not doesn't seems to be the only factor. It is more in terms of the smartphone cost and loss of the cost smartphone in case of any accidental drop or it falls in water. So these are some of the things which they said that we don't want to use it. I'm comfortable. Or there is a segment of customers they say that I don't know how to use it, but I don't want to learn new, maybe my daughter or son or daughter is there, or daughter-in-law, son-in-law is there, they will use it. But I don't want to learn this. Also, we thought that by providing access to digital payments, the problem is solved. Instead of coming and collecting cash at your doorstep, we will do Nash, or we will give you a QR code. You make the payment on your own on the due date. So we have given you access, right? So that the access, we thought that access will get converted into an action. That's what our initial expectation was. But just before getting into the other points, what are all the modes of digital repayments that are available? Nash registration is, Nash registration. It can be a manual Nash or a e-Nash. If it is a manual Nash, then we are we require a banker's verification form. Supriya, can you please mute? I think there is someone on. Thank you so much. So if it is a manual Nash, then there is a requirement of banker's verification form for the signature authenticity, which takes around 3 or 4 days for the farmer to go to the bank, talk to the bank managers or the staffs, and get the BVF form. Or if it is a e-Nash, then the e-Nash can be done in two modes, either through biometric or other authentication, or through debit cards, right? So there is a different two modes of Nash registrations that are available, but it has got, everything has got its plus and minuses. The direct QR code, the repayments made directly to the loan account of the borrower through QR code. So there is, the bank has given a QR code where there is a loan account number is already embedded. I just go and I transfer money, and it hits instantly. It hits the loan account instantly, and it gets credited. So I'm done. That is the QR code repayments. The third is the UPI auto pay, which it is yet to be implemented, but there's also another area which is being explored. So that UPI auto pay helps in making having a standard standing instruction within my UPI app, or maybe a GPay or PhonePe or Beam that I'm using. So I can have standing instructions on that particular date. It gets debited. However, in UPI autopay, what happens? I can stop it, right? It is under my control. Even a day before the standing instruction date, I can disable it. But in Nash, for example, he has to go through the process. This is quite important, because I just would like to talk a bit on the behavior part of the customers, which I would like to say that digital and the discipline. So if you look at most of these customers with whom we are offering the cattle loan, the ticket size is around average ticket size is around 1 lakh, but the loan starts from 50,000 rupees to 2 lakhs, but our average ticket size is around 1 lakh. Most of these borrowers are also borrowers with other microfinance institutions, or the spouse has borrowed, whereas the farmer borrows from us. If you look at the microfinance as an industry, they follow a beat system. They follow specific date of repayment, and on the fixed date, the repayments happens, and mostly it is cash. So these farmers are used to make the repayments in cash on fixed date, where there is a physical interaction. For example, they know that Ravi will come to my household or house on Wednesday morning at 8 a.m. So I should keep the money available to make the repayment. So that is what they are used to, the behavior for 12 months or 24 months. Whereas in digital, if you look at it, this particular this thing is lost. And the other thing is, if there is no in-person visits, also leads to delay. For example, if I'm not there, but for the farmer, there is an option given. For the borrower, the option is given to make the repayments anytime during the day, because if it is 5th is the due date, the borrower can make the payment on fifth morning as well as fifth evening, right? So there is no, and he has got the option to make the repayment anytime. If you look at the rural, there is always a competition because uh, Tamil Nadu is the second largest microfinance market in India, and there are there are many lending institutions working in almost all the locations. In this case, what happens is there is a borrower. She has to make payment to lending institution A. While we are there, where ours is digital, and there is someone who comes and stands in front of the house for physical payment. So there is a pressure, and where the cash goes to the lender who is physically present. This is some of the things which we have. The digital versus the discipline. Also, in if it is the physical interaction where I go there, I ask the loan officer or the sales officer, can you please give me a repayment sheet, tell me how many installments pending, or do you have any other products or solution, or I am looking for another loan. All those things gets lost because in discipline in the digital mode, it's completely there is no physical or a human intervention that is there. I just would like to move to the next discussion point on reality. These are all, if you look at there is a digital transformation happening. People are getting used to making repayments digital mode as low as 5 rupees or 10 rupees. Smartphone penetration is increasing. They know how to use it. But at the same time, what is the reality? The reality, as I mentioned to you, for a manual NASH registration, it takes 1 to 2 weeks. We started with manual NASH, and the banker's verification form was mandatory. To get the banker's verification form, as I mentioned, it used to take 3 or 4 days. Then the NASH registration itself, for example, if you look at the RBI, as per the RBI mandate, the bank where the NASH is registered, they have got a time of 14 days to respond. So it goes manually to the head office and it comes back. Without BVF form, what happens is the rejections becomes very high because the signature mismatch. If it is a signature mismatch, that in addition to the TAT at the BVF to get the BVF, there is a TAT required for the registration as well. The other important point here is the trust factor. For example, I am transferring money to a loan account number. I am given a QR code, but yes, I have transferred money. Is it have I transferred to the right place? Has it gone? Has it hit? There is a trust element. So what there are in some cases where we came across saying that, sir, it's okay. I will transfer money to your employee's account, which is absolutely prohibited. It should not be done. But they ask, can I transfer to your employee's account? We said that no. Then we show them that making the payment and show them that in the repayment sheet that it has the money has been received. That becomes a very clear confidence for them that yes, I can the money has been sent to the right place. If you take eNASH registration, there are various ways of eNASH registration. That is, one is Aadhaar OTP. If it is Aadhaar OTP, the expectation is the direct benefit transfer (DBT) happens directly to the account, and all the accounts, the Aadhaar numbers are mobile number mapped, which is not the reality. What happens is either the mobile number is they have mapped it, but it is not in use, or the mobile number is not linked, or the mobile number is used by someone else in the household. So getting that mobile number mapped itself takes around 24 hours to 36, 48 hours, because they need to go to the nearest e-Seva Kendra and place a request. And it takes around 24 hours to 48 hours to get the Aadhaar number linked. So once the Aadhaar number is linked, then there is an Aadhaar OTP is generated, and through the Aadhaar OTP, it itself shows which are all the banks that are available, and the eNASH registration can be completed very quickly. There is a debit card. If the household has got a debit card, through the debit card, the eNASH registration can be completed. Also, the internet banking, but we don't have a single case of internet banking used in our entire customer base who have, who has used internet banking to register NASH. So this is not present at all, right? Which I have, the other important point I would like to highlight here is through the digital mode, the reality is we don't know who is making the payment. Maybe Ravi is the borrower, but my daughter or son may be paying from somewhere. We don't know. Why is it important? Because if there is a a loan is taken by someone, but the loan is utilized by someone, which is very, very unclear. Whereas if it is a physical mode, I know that the person is there and he pays cash. Still, there is an element that someone would have paid cash, but here in this case, I take cash directly from the farmer, right? So, which is not clear. The other important point is the NASH bounced cases, because the NASH success rate is around 72 to 75%. That is the NASH success rate that we have. So the NASH, once the NASH bounced cases are of 25 to 28%, those cases we need to follow up. And those follow-ups, there is a digital payment that happens, or there is a cash collection. So there is an element of physical interaction that is required, or a telephonic call, or talk to them and get the repayments. Also, the farmer, if you look at it, depending on the bank, there is a charge towards NASH bounce, because every NASH bounce that it attacks a penalty for the customer. It ranges anywhere from 150 rupees, which you have come across, even to 600 rupees per bounce, which we have come across. So there is a cost attached to the customer for NASH bounce. Some of the disadvantages, though it has got a lot of advantages, the disadvantages that we come across is losing the customer interactions, because I don't tend to see, there are many customers whom they are paying very promptly, but always it goes out of sight, right? Or we don't even meet them. So we have a separate team where to strengthen the relationship, there is a call that goes to them once in 3 months, which we connect with them over a call regularly. So we have a separate team who do that, but we don't lose, but there is a possibility of losing customer interactions. If there is today is the due date, the NASH is bounced, but there is a delay in repayments, but unclear on exact repayment. Whereas on a cash collection date, there is a date. I know at the end of the day, out of 100 accounts, I have collected 98 accounts, 96 accounts. Here in this case, I will be knowing on the next day morning based on the collection report that we get, because all the money that gets collected, it doesn't get routed through us. It gets routed, it goes directly from the borrower to the bank. So it doesn't get routed through us. So we don't know till the report comes. Or we rely on the data from the staffs, where there is a possibility of mismatch, but we have to rely on the data from our own staffs for the day, during the day. Only we will come to know for a reconciliation only next day morning. Also, we don't know the changes that have happened, that has happened in the household level on the cash flow. Maybe the customer has sold the cattle, he has purchased cattle, or anything else on the dairy side which we will not be knowing. These are some of the disadvantages which we have identified. See, if you look at the opportunities as such, if you look at it, digital transformation is expected to continue. It is a great opportunity, and 100% repayments may not happen, because based on the journey so far, we will stay continued on the digital repayments. However, out of 100 accounts, 90% is digital for us. 10% is a cash transaction that happens, which we want to move to higher percentage, or reduce this cash transaction. But 90% is digital transaction is what that happens now. So what I would like to summarize, given this great opportunity of the digital transformation, and also to reduce operational cost, and also to complement on the scalability, in the rural space, at least the segment with which we have been operating, 100% digital repayments may not happen. We might have to be comfortable in accepting, 5 to 10% of cash repayments, and we need to modify our operations accordingly, so that it goes efficiently and complements to the organizational goals. I'd like to stop here and take questions.
Thanks, Ravi. This was very, very informative. I saw that I think there was a comment and a question in the chat already.
Yes.
So Sachin, and you can of course read it right there. Um, do you want to come in, Sachin, if you want to ask your question yourself?
Yeah. No, no, I see. I have been in Airtel Payments Bank currently with a health insurance company. I think the current team at Airtel Bank works with entities like Stellapps, uh, because they have 5 lakh cash collection points in tier 1 to tier 5, right? So these points, while the transaction is in cash, but the remittance to the collector is digitally, right? So they've been, I think, folks at Stellapps and a lot of rural partners have used these for cash collection, because these are also the points where you have common customers and people coming for remittance, etc. And second, just a quick one, while it's not directly related to digital repayments, but if you see factors of impacting repayments, including health or any other disruptions, then does the team put any protection measure against the same?
Great. Thanks, Sachin. The first question, maybe I would like to take it on a one-on-one. We do have some experience on working on the particular front. I would like to not to comment here. The second point on the health issues, yes. If there are the some of the delayed repayments, what we come across is also due to health issues at the rural household. Someone is ill, that's a phenomenon which we have come across, and we have to be flexible on that on a case-to-case basis. Yes.
So essentially, Ravi, what happens is in health insurance, there's a product which is when attached at a nominal premium along with the loan dispersal, right?
Yes.
Covers the EMI repayments,
Yes.
right? So it
Yes.
can cover both the principal and the EMI, and the fraction of the value can be adjusted, depending on the ability of the end loanee to repay, kind of absorb that cost.
Absolutely, we can look at it, and one of our group entities, if you look at it, Dvara Health Finance, I think
Right.
they are specializing in this particular segment. Yeah, we can look at it. Yes.
Sure. Thanks.
Thank you.
Any other questions from the group? Great. So I will ask mine.
Yes,
Ravi, do you what kind of a field presence does it require um, for your own repayments? How many employees and what kind of profiles?
Okay, so we have common resource who does sourcing and collections. We don't have separate collection staffs. We have around our field operations as such. If you look at it, we have around 65 to 70 staffs who are completely into the field operations. In the selected clusters, we form clusters. A cluster is something, one or two contiguous districts having 3 lakh plus cattle. That's our criteria, and we operate in those locations. And that is the number that we have. And one is on the the number of employees. Sorry, I missed the second question, Supriya. Can you please repeat? I'm sorry.
Just asking and what profile? So you already discussed
profiles. I'm sorry. Yes. On the profiles, if you look at the entry level, we call it they are called as Surabhi Mitras. Surabhi Mitras are a diploma plus experience or degree plus experience, and we are agnostic. Male and female, both, and they are from the rural. Preferably, what we do is they are from a pin code A, that is the base location. They can operate from the house, but that particular pin code is excluded from sourcing. So the all other pin codes adjacent And what we do is we identify pin codes based on the cattle population, and we work in the specific high pin code, the pin codes having high cattle population. But the profile is practically it's a degree or a diploma holder with or without experience. That's what we take.
Got it. And on the insurance piece, you already have almost like an embedded cattle insurance
Yes,
part of
yes,
the loan, right?
yes, that's right. That's right.
Got it. Those were my questions, folks. If there are any questions, we can take them now. Otherwise, we will close the forum. And thanks, Ravi. Okay, I'm assuming that that means no questions. All right, then. Thank you so much for joining us, Ravi. This was very, very informative. I saw some of us making notes as well. We wish you the best. I am sure Dvara Dairy is going to grow manifold from with the kind of things that you're doing.
Thank you so much, Priya. Thank you once again for the opportunity. Thank you all for the patience. Thank you so much.